there is something truly special about Lincoln Labs staff and culture in terms of just the engineering talent and the drive to accomplish really, really hard things with superb talent and incredibly mission driven. And, you know, being on the phone at 2 a.m. to Lincoln Lab personnel while in Iraq debugging stuff just hammered that home for me early on. So it's been great to be able to continue that relationship through DIU and now at the Engine. So yeah, please echo that back to the Lincoln Lab.
Yeah, I forgot about Sandoc. I should certainly remember that one.
Just couldn't be a better enough experience on all sides. So as Bernadette says, I run government affairs and also I'm on the investment team at MIT's The Engine. The Engine was started 4 years ago now, and if you haven't looked at it, go to the Engine website, engine.xyz. We just published our 4-year report on what all of the portfolio companies have been up to, which is really quite amazing. MIT first came up with the idea for the Engine based on President Rife's kind of, classic understanding of the Valley of Death, of why there's so many breakthrough technologies that are not just on MIT shelves, but on university shelves and national laboratory shelves that just never see the commercial light of day. And so a lot of study was done on the friction that was stopping these technologies from becoming foundational dual-use companies for our national industrial base and national security industrial base. And what was born out of that was the Engine. The Engine is kind of a complicated structure, but we focus on tough tech, which in broad categories, we kind of bucket into 3 categories. So there's climate, which is where our energy portfolio companies exist, human health, which is where our biotech platform companies live, and then kind of a catch-all bucket of advanced systems where our AI chip companies and autonomous vehicle companies and data center optimization companies live. And so the Engine is kind of 3 things. One, it is a classic venture capital fund with the main difference that we have patient capital. So to understand that for hardware intensive companies, it takes more capital and longer time to get to market. Instead of having a typical 6-year fund life, we have an 18-year fund life. We are also a B Corp company for the public good that runs space. So one of the big friction points for folks leaving academia or spinning out of Lincoln Labs is the immense amount of capital equipment costs it takes to stand up your lab. So we created space, co-working space in the Engine that has laboratory space, which was actually probably our most important contribution. The lab space is way more in demand than office space. So as we open up, right now we're in a 20,000 foot facility. We're opening up in a year and a half a 200,000 square foot facility on Main Street. But we offer, wet lab, chem lab, bio lab, et cetera, maker spaces. And then there's kind of the network in which we kind of put the capital stack. So that network encompasses government, it encompasses academia, it encompasses corporate and industrial partners that do pilot projects with our companies. And it also involves the tough tech founder community. We believe that, regardless of the discipline, and oftentimes tough tech companies are multidisciplinary, that founders go through similar journeys in tough tech, and by convening founders together under one roof, we have found that just amazing synergies occur, especially when we scaffold those founders with the other folks in our network. So yeah, 4 years in, we have 2 funds. We closed out our first fund and just finished raising our second fund. Our first fund had 27 companies, and our second fund should have around 35 companies. And we're off to the races and really looking forward to scaling from, as I said, our 20,000 square foot facility that hosts 200 entrepreneurs to our, what we're calling the hub, which will host over 1,000 folks.
Well, I can't wait to see it. I hope I'm at the ribbon cutting and it's definitely not virtual. So Oren, thank you. I mean, I think a lot of us understand a little bit what deep tech and tough tech is, but perhaps not the full recognition that these things take more time and more resources to get to the point where they could be productizable and fully commercializable. And I love the expression patient capital. So thanks. For those companies that might be on this call right now, is there any particular advice you would give to small companies in this tough or deep tech space as they are trying to bring their ideas forth?
Yeah, so there's a lot of talk of dual use companies, and we believe at the Engine, and a lot of venture capitalists don't share this opinion, that because of the capital requirements in tough tech, government as a partner is a significant source, not just of capital, but also, and I think Lincoln Lab embodies this, of facility, of resources, of IP. And so we believe that public-private partnerships are critical for tough tech. But there is kind of a swath of companies that generally engage with the government. And I kind of bucket, and you can see this in sort of general SBIR research, there's kind of your engineering services company that can be a really meaningful and super important company to the government, but kind of doesn't have like a really substantial long-term kind of revenue and product roadmap. And then there's kind of DoD specific companies that require a certain capital stack. A lot of kind of SBIRs transitioning into BAAs and other larger contracts, and kind of going down that road of figuring out how to make the government work for you as a customer. We at the Engine don't invest in those types of companies, but there's this whole space of dual use companies that have a significant ability to grow a commercial company. And we're talking, at the Engine about anchor US national industrial base and national security industrial base companies, the next GEs of the world, the next Intels of the world. But those companies also have a particular use for government in the technologies that they're investing in. So, if you look at the top 10 R&E focus areas, we invest in all of those areas with the exception of maybe hypersonics. And so when we think about dual use, it's not just for early stage government capital. It's also, as I said, for these companies to get kind of the resource support, the range space, and government as a customer, while tricky, makes a great risk reduction customer, especially when you think about government testing and the validation that you can get from government testing when you then go into your kind of commercial focus of, saying, hey, the Air Force just tested our product and gave it a mil standard, John Deere, you should be comfortable giving this an industrial standard. And so we actually have seen government participation in these dual use companies actually accelerate kind of slow cycles. So mixing the right blend of public and private capital and partnership is kind of the needle that we try to thread at the Engine.
Thank you. I mean, even the entire discussion of dual use is kind of provocative. We have thought for years, well, we build things to solve national security or military problems. Surely some of them could be useful elsewhere. But in fact, when we tend to go through the lists, there's hardly anything we can find that's not actually dual use. I mean, when you look at advances in communications and sensing and medical, I mean, these all are useful to everyone. Even hypersonics, if you talk to the NASA engineers, are very interested. So at the end of the day, the space is quite a bit larger than we might already have thought. I want to pull a little bit on that thread you mentioned about public-private partnerships. I showed the graph earlier, I'm not sure if you were on, about the disparity in R&D spending in the private sector versus the federal sector, but how so much of what drives our current economic engine in this country is actually built on the backbone of former federal investments. If only we knew which were the ones that were going to pay off, it would be great. Do you have any thoughts about how the two sectors can work together to either accelerate, again, if the point is betterment of mankind and social impact, what could we do now to move those things forward in the right direction? Any thoughts?
Well, we might have to extend our time window a bit, but I'm happy to give we'll hopefully be a brief answer. So I talked a little bit about removing frictions. And so we identify kind of three, to pull out the old trope, valleys of death in breakthrough technologies. And so maybe it would be helpful for this crowd to just run through them and kind of our recommendations around them. The first is that kind of weird moment for a postdoc or a research scientist in a lab where they're not sure if there's a commercial opportunity, but they kind of have to leave the lab before they start working on it. And there's this sort of weird, end up, earmuffs, Bernadette, but end up working in labs, past midnight, like kind of off the record and whatever. And there's just this awkward time period where it's not really supported in our current sort of academic funding of breakthrough technology. And so we're a big supporter of entrepreneurial fellowships, which is something that Ilan Gur has been pushing and is part of kind of Activate, which we wholeheartedly endorse and think is a great kind of program that we'd love to see expanded, to see potential entrepreneurs have the space before they're quote unquote investable to kind of figure out what it is that they want to do and what their opportunity is. And then there's this second valley of death in the kind of early investment stage where, unlike a software, consumer dating app play, even in the early stage, you need a certain amount of capital to get something done in hardware, even if we provide lab space and equipment and whatnot. And so we are a big proponent of these emerging matching capital grant programs where we sort of see it solving two problems. One is government's not really very good at identifying commercial marketability. They're really good at identifying government problems. So most government innovation orgs tend to start government first. It's very important for our conception of dual use that you start with a commercial market first, because if you don't have that, you're kind of dead in the water and need to go on that kind of government only product track. And so partnering government capital with private capital, where private capital is putting skin in the game, which is then matched to some extent by government capital, we feel like, one, that helps private capital markets get more leverage off of their investments, but also helps the government use the amazing sourcing and analyst capability that private capital brings on the commercial analysis of potential for companies. And then there's the big swing, which is scale up. So there's things like the DOE Loan Program Office that can kind of have existed, and there's the Cylinder thing, and government's not really good at having a portfolio high risk approach where failure is acceptable. But at the end of the day, for us to build up a strong national industrial base system where you're talking about pilot projects, especially in the energy space, but this is kind of across the board in quantum computing and fabrication of semiconductors and whatnot, that even your first project can be $50, $100, $500 million, and you can't get traditional capital like project finance or debt on those initial kind of pilots that are way more capital than what venture capital can support on kind of equity investments. So there's this gap when companies in the tough tech space are ready to actually put in their first commercial installation, but before they've done 3 of them, where the kind of debt markets take over and can fund those demonstrations, there needs to be a government backstopping of loans and whatnot to enable companies that have those high capital, what we call first of its kind scale ups, to be able to have those see the light of the day. So that's my very abridged 3 value of death answer.
Well, I think we're trying certainly to address the first one. I think embedding startups in laboratories, and it's not just ours, but others, or being able to leverage government investments and resources that could also help kickstart the companies that's serving these sectors. That's step one. I think that's great. The middle one is really quite interesting. Once the initial capital resources, and to your point, there are government investors like In-Q-Tel or the old Army Venture Capital Fund or the new National Security Investment Capital Fund that are trying to feed some of those entities, again, with a dual use mindset, but a commercial recognition. This last one, that's a big one. And I think, personally, the government could help a little bit by, if not guaranteeing a market, at least facilitating that there be market demands that could help supplement the natural commercial growth. I'll also point to the almost 200 billion of dry powder left on the table each year. Maybe we need to get those software investors appreciating tough tech a little bit more and making their capital a bit more patient. Before we open to some questions, any comments, any opportunities, challenges, anything else you want to sort of share here?
I think just for the benefit of the folks in the crowd, there's always this question of, you can be in a comfort zone of having done a couple of SBIRs and you've kind of gotten the muscle memory on how to do those. And, you might have a vague notion of commercial opportunity and kind of, think that, okay, well, we'll leverage this government program to maybe explore the commercial opportunity. And that can be successful. But just, it is very hard in a company working on a government only contract to have the capital available to build the things in a company, everything from kind of marketing to operations to infrastructure, that is really necessary to create a high growth commercial business. And so it's more of an art than a science on when the right time to bring in private capital, and that private capital can mean many things. But ultimately, just because it's an unknown entity, don't be afraid to reach out to the private capital community, and certainly myself, the engine, and Bernadette, hopefully you'll put my email up on the screen at some point. But at the end of the day, venture capitalists, we take meetings for a living. So we meet, depending on the firm, hundreds, thousands of companies and entrepreneurs. And we are, part of our mission at the engine is to help even folks that are still in the lab that haven't spun out a company, be a sounding board for, hey, when does this have commercial viability? Do you think about spinning out in the lab? What is the, what are the milestones that you would need to meet in a first round of funding, in the first 12 to 18 months in order to let you raise the subsequent private capital to, do product development, and then the subsequent rise of capital to scale your market penetration. And so those initial conversations, we are here as a resource for you especially in the Boston community. So, please don't hesitate to reach out, not just to us, but to other private capital providers, and just, use us as a sounding board. It's something we're happy to do.
Thanks, Oren. And Teresa, I'll ask while we're talking if you wouldn't mind putting, Oren, do you want us to post your email directly, or just a reference to the engine? All right, okay. Thanks.
I will post that in the chat. There are some other questions in the chat. I don't know, Bernadette, if you need me to read them out or if you've got them.
Well, I'm just now looking at them. So let's see, there's some, I want to get the ones for Oren. Question to Oren. If your fund who are your investors? Are they endowments from MIT? Do you only invest in MIT graduates?
We I guess an important note is, from a fund perspective, we are totally independent from MIT. MIT is an anchor investor in the fund, but we have a lot of other investors. All of our investors are bought in both to the impact that we're trying to make, as well as the thesis that while it might take longer and more capital, that these tough tech companies can be, fundamentally big companies that provide not just impact to the world, but also significant capital returns to the investor community. So our investors in the engine have to kind of buy into that thesis. But I think, when you look at one of our early investments, Commonwealth Fusion Systems, if we solve, fusion energy, it might take an inordinate amount of time to scale that, but when that scales, the returns from that company will be outsized to your typical software company returns. And of course, the impact to the world and carbon reduction and whatnot can't be overstated. So I think it's just as with all things, as you're thinking about investors, you need to make sure, and we need to make sure at the Engine, that our investors are aligned with our mission and our vision. And as long as they are, it's great. And if they're not, things can get very crosswise in a hurry. So I would feed that back as advice to companies that are considering taking private investment in the call.
So there's another question. Is there any bias against solo founder startups?
Sorry, solo founder?
Yes.
It's a really interesting question. I guess I would say no, but there's an old joke in venture capital that what are the 4 things you look at? It's team, and market, right? And so it's not to say that a solo founder can't go and raise private capital, but part of the thing that investors will look for is not just can you execute technically on your vision, but can you build a team around you that can both speed up and risk reduce that technical and product development, but also build a team around you that is everything from government affairs to marketing to business development to CFO roles. Like, are you somebody that can create a business that in 10 years is a 10,000 person business with you still as the CEO capable of creating these teams of teams? We at the Engine at least believe that technical founders make the best founders, whether that be in CEO or CTO roles. But there is certainly a leveling up process as you go from kind of a technical founder to a company leader.
So thanks. Given the focus on tough tech, does the Engine tend to prefer hardware-based startups?
I think it would be fair to say that the majority of our investments have a significant hardware component. We have invested in a couple of what I would call pure software. We have a quantum software company. New investment in the routing company, which does optimization software to solve transportation deserts in ride sharing. But generally, when we do, what is tough tech software is definitely more art than science. And so we look at kind of the impact that a company can have. And we generally like to see if it is software that it's, bits very close to atoms, and hopefully those atoms are impactful atoms.
Got it. So let's see, I got a bit of a challenge question. Where did the $200 billion in dry powder come from? So never quote a number without a reference, but I do believe I read an article sometime in the last month that said in 2019, there was $192 billion of dry powder left uninvested from the VC community. So I will make it a challenge to look that back up, but I welcome you to. I think though it underscores for those of us who are used to working in the federal government world, that's ridiculous, right? I mean, the entire federal R&D budget is 160 billion a year for everything. So when we hear about these numbers, we kind of don't want to believe them, but we should.
Well, and that goes to the overall thesis of,
it does.
If the US government wants to kind of stay globally competitive and invest in our national industrial base, given the amount of private capital that's available right now globally, the government can no longer direct innovation in the US and globally, but it still has enough capital and influence regulatorily to, I call it, shifting the direction of the boat. So if the government can apply its capital through the things that we were talking about before in those 3 buckets to open the aperture, I think that would be a hugely effective use of taxpayer money.
Thanks, agreed. We have a few minutes left, and there's a question that's very specific here. Oh, Warren, they're all going to get you. This was an Engine company presented to the Kairetsu Forum on the West Coast. And the writer says they're shocked that it had graduated so quickly out of the Engine. Do you have anything else coming out soon?
So I guess graduation isn't kind of the term that we use. We provide space to companies until they—
It was my term, not the question, sorry. I paraphrased.
until they outgrow the space. So really, you know, we're there to support companies, and there are companies that we invest in that never use our space because what they need just isn't suitable for our space. And hopefully with the new space that we're opening up, even more companies will be able to avail themselves early on. But yeah, there's no right or wrong answers on when a company, you know, moves out and kind of takes on its own space or another, you know, creative use of space. So yeah, we view it as just, you know, space and lab equipment is a tool, and each company is different as to how they utilize it. And you know, when a company moves out, we certainly celebrate it, but we are still as invested in them from a capital perspective and the founder community is when they were living inside the engine.
Well, with all that space, they may never leave. So it looks like maybe one more. And it's an interesting question: is are there any particular parameters or metrics that you use to assess the impact of the companies that you choose to support at the engine?
Certainly, it is not a mathematical analysis. You know, there are some firms in the energy space, for example, that you know you need to have a technology that can remove X gigatons of carbon, or else you know you're not investable by us. We don't kind of take that view, and because of the multidisciplinary nature of companies, we don't have a hard view on what type of impact, but each of the companies that we invest in, you know, part of our thesis is that they will have a significant, whatever significant means, impact globally for good, and at the same time will grow into a foundational company. I mean, there are other types of funds that are, you know, impact funds and philanthropies that can fund companies that just are not in a growth position that they can be, you know, venture investable. And we fully support and are partnered with those type of funds and philanthropies. But for the engine, you know, it's this kind of artful mix of impact and potential company growth that we have to evaluate on a case by case and kind of topic by topic basis. So I recognize that was a total non-answer, especially for the mathematical folks in the audience, but hopefully that at least gives some idea.
No, I think it grounds us, right? A high impact company with no potential for success would not do any of us any good. So
right.
Appreciate it.
You have impact if your core technology can be impactful. The only way you can truly have impact, because you know it's very hard for philanthropies to float a company to global impact through its whole cycle. If you have a commercial ability to grow as a company, and we believe that that company will be producing good in the world, that growth kind of checks both boxes of kind of capital returns that a VC fund needs, as well as impact globally, and it's impact motivated by economics. So that's the art.
All right. Well, gosh, thank you so much, Oren. It was really nice to catch up with you in this particular crazy format. And thanks so much to everybody who stayed on the line throughout there. We still have quite a few number of people. I hope personally that this was helpful in understanding a little more about Lincoln Lab, how to do business, and the connections that we make that we think will promote in general growth for the betterment of the economy, for social well-being, et cetera. I also want to give a special thanks to our hosts at the Venture Cafe, to Yulia and Xian and others that support and organize this entire thing. And I look forward to a future one where the networking is physical.